Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, December 5th, 4:47 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in an uptrend, as you can see from the trend gauge in the upper right, the coveted four green arrows, meaning market leadership, plentiful and acting well, and all the major indexes trending across the three time frames that we track using the short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. When you're trending above all three of those on those time frames and leaders acting well, you want to get as much money allocated to the market as you can. So what happened today? After being up 11 out of 12 days on the S&P 500, a bit of a rest day. We've been seeing contracting volatility. We had a very tight range today. A little bit of afternoon weakness closing near the low of the day. Not a cause for alarm at this point. Mid and small caps continue to lag. We kind of expected a bit of a bounce there by now, but we haven't gotten it yet. We're on the lookout for that, though, as the percent of stocks against their 5-day moving average is in the 20-30% range. That is on the very low end of the range. And normally after when you get down there, you get some kind of a pop on breadth, and that's what we're keeping an eye out for. So here are the numbers on the day. 21 over 21 list. Leaders lagged a bit today. 7 up, 1 neutral, 13 down, down for an average of 0.4%. The big eight led by Tesla, 3 down, 5 up, led by Tesla up 3.2%, up on average 0.6%. The RGHR8 growth ETF composite, all 8 of them down on the day for about 1% on average. S&P 500 open flat, closed down 0.2. Equal weight S&P down 0.5%. NASDAQ 100 also opened flat, ended up down 0.33%. Equal weight down much more, down 1.11%. A lot of software and semiconductors pulling back after some recent strength is what you see under the surface there. Dow down 0.5%, broke above 45,000 yesterday and closed there, back below it today. Mid caps down 0.8. Russell 2000 small caps down 1.25. Global 60/40 stock bond just barely positive. Our flagship GROTECTION portfolio down about 0.1%. Let's get into the charts. We'll start with the S&P 500, and I'll go to the 60-minute chart here. Draw some lines you can see very clearly. Yesterday, the break above this 60/50 level with a gap there. If we pull back, and this is going to be one of our keys for tomorrow, we pull back, wouldn't be a surprise to go into this about 60/20 to 60/30 to 60/50 range, but we would want to bounce there and preferably hold that 60/50 level. So we'll be watching 60/50 tomorrow and into next week on the S&P 500. You can see a lot of blue here. There's the 11 out of 12 days up before a little bit of a pullback today and riding nicely along the 8-day moving average. We did get 3 ATR extended from the 21-day moving average and did some offensive selling on SSO yesterday. On to the NASDAQ 100. Um, Same situation with a gap up. If you go to the 60-minute chart here, we're going to watch this 516 level, which is where we gapped up. For a gap fill, we would accept coming down into 515. Really want to hold that. You can see 515 over here back in the beginning of November was a resistance level that we finally broke through earlier this week before the gap up on Wednesday. So when you pull back, we want to watch that 515, 516 level. Again, trending nicely, all-time highs yesterday, just a little bit of a pullback there, and the NASDAQ 100 has been showing relative strength for the past week and a half. Onto the Dow Jones Industrial Average. Tight range here. You can see closed above 45,000 yesterday, back below 45 today. Very constructive looking chart still. Now on, well, before we go to mid and small, let's take a look at equal weight S&P 500. And you can see this has been pulling back more and is actually below the 8-day moving average. Not a surprise because of the relative strength being shown by the NASDAQ 100 names. We'd like to see a bounce around this 185 area on equal weight S&P. That's still slightly above the 21-day moving average. All right, on to mid caps now. Mid caps pulling back, breaking below the 8-day moving average. It's really right around this prior failed breakout from 3 weeks ago. Nothing to be alarmed about, but definite relative weakness over the last week and a half. Same thing with small caps, relative weakness over the last week and a half, broke the 8-day and this 2400 level. Certainly need to watch this 21-day moving average and would expect a bounce there. When your expectations don't get met, you've got to change your expectations because that's the market telling you something other than what you are expecting. We're looking for what's normal in the market. And when you get to abnormal, that's when it's time to take action. As long as the S&P has a 6 handle, not a problem, preferably above 60.50. And the 21-day moving average next week should come back above that 6,000 level. Let's go back to the S&P and look at that very quickly. You can see the 21 here. A couple more days. We're going higher, about 8 to 10 points per day. That should get us near the 6,000 level early to mid next week. Those are the major indexes. Now we're in our asset correlation. Let's go to the VIX. VIX nice and low, the way we want it to be, trending below the 21-day moving average. It does its best work in this below 16 and with a 13 handle. Very nice. That's confirmed by the contraction on the S&P 500 over the last 21 days. Now below 0.8% on the S&P 500. From the VIX, we'll go to the dollar. Dollar still holding that top from about a week and a half ago. Second close now below the 21-day moving average out of the last 5 sessions. This is what we want to see. How did that translate into the precious metals? Gold breaking back below the 21-day moving average. Serious relative weakness over the last month. Silver, SLV, slightly positive on the day. Gold stocks, that's GDX, can't get back above that 21-day moving average. It's acting as resistance. And Bitcoin broke above 100,000 after 9 o'clock Eastern last night and held it for about 18 hours. Back below 100 to the 99,000 level as I do this right now. So not a surprise. Failed breakout. We came near 100 about 2 weeks ago and pulled back from there. It's never a smooth ride in the market. Expect the unexpected. A lot of people thought once you broke 100,000, you'd be off to the races. Not so fast, my friend, but really nothing wrong with Bitcoin at this point. From Bitcoin to bonds, mixed action on the bond market today and tight ranges. There's the broad bond bond index, BND, the long bond TLT, that was up slightly, which means the 30-year yield should be down slightly, and it was, as well as the 10-year just basically flat. So that's our inter-asset correlation. Let's get to the tail of the tape. Stochastics positive for everything that we track. Tomorrow morning, non-farm payroll report. There are certain expectations that go along with the Fed. It's the 70+% chance of a rate cut in December. The non-farm payroll report needs to maintain those expectations, so not looking for any major surprises, where the market does not want to see any major surprises there. Keys coming into today, S&P against the 8-day moving average, still above there, against that 515 level, still above there. Mid and small breaking out? No, in fact, they're pulling back a little more than we would like to see. Bitcoin versus 100K broke above last evening, back below this afternoon. Still nothing wrong with that. Day count, 1-day consolidation after being 4 days up, 10 days above the 80 MA, 13 days above the 21-day moving average. That's on the S&P 500, and our expectations remain positive as long as we're above the 21 on the S&P and NASDAQ 100. As far as sectors go, to the upside, XLE, energy, F, financials, Y, discretionary, P, staples, U, utilities, and to the downside, after some recent strength, quite normal pullbacks in semiconductors, software, materials, industrials, healthcare, IYT, that's transports, XRT is retail. Portfolio, MSTR. Well, let's take a look at this chart real quick. So with the move above 100,000 on Bitcoin, MSTR was up big after hours and this morning, but looking at a 5 minute chart, this was a liquidation event on heavy volume. So we gapped up and really sold off all day, sold off harsh in the morning. When we broke back below the 400 level, we sold the rest of our the piece that we had left. We've been taking some off the entire run up, including around the 470 level. This last piece, we closed out around 395. That last piece, about 180% gain. So very lucrative. Obviously, we'd have wished we'd had a uh, much bigger position in this, but there is the suitability guideline that we have to go by for people approaching retirement. Not really prudent to have massive positions in extremely volatile names, but that's why we size according to volatility here at Revere. So we closed out MSTR. We added to Tesla on a clean break above 360. And CRDO mentioned this earlier in the week, big gap up on earnings, 2 day pullback. Very nice. And we took a starter position in that. That raised our beta from adjusted beta from 1.89 to 1.95. Bottom line on the day, after 11 out of 12 days up in the S&P, a mild pullback. Small and mid caps continue to lag. The four keys for tomorrow: S&P against 60/50, NASDAQ 100 against 516. Will mid and small finally look like they were wanting to break out or at least get back above the 8 day moving average? And how about Bitcoin versus that 100K level? That's what we'll be looking at. Let's take a look at the portfolio and the 21 over 21. We'll take a look at the five highest up on the day and the worst five on the day. Let's start with what was up. As always, if it has a green flag over there, that means we own it. Tesla, there's the break above the 360 level that I mentioned. So we added to our position there. Palantir continues to be a beast, riding the 8 day moving average higher. CLS, same situation after a bounce off the 21 last week. VRT, nice volume move up off the 21 and up decisively through the 8 day moving average today. And CRDO, this is the one that we took a starter position in. When we take positions in gaps, uh, stocks that gap up like this, we size it against the low of the gap up day. The best ones shouldn't break the gap up day. We give it around 1 to 2% for an overshoot to the downside. And then the next level of support we look at is when the 8 day moving average, that's the purple line, comes up through the bottom of the gap up day. So when it came back today, let's go to the 5 minute chart. Got a little ahead of itself yesterday, then pulled back most of the day, and then pulled back again in the morning. When it pulled back there and got within the reasonability level of where we could take a small position and not lose more than 15 basis points of the overall portfolio against the bottom of the gap up day, we pulled the trigger. And if it starts working now, we'll add to it. We've seen this all the time. We're not afraid to buy big volume gaps higher. That means Wall Street is offsides. They adjust their price targets. It got a bunch of CRDO got a bunch of price target raises after its earnings Monday night into Tuesday morning. Really nice earnings in 20 fiscal year 25 and 2025 and 2026. Yes, it's expensive. Most growth stocks are, but they provide components to AI data centers. And if you listen to us for any period of time, you know that AI data centers is a very hot theme going on for us. So, all right, those are the top five. Let's go to the bottom five on the day. And sorry, let's resort this again. Bottom five on the day. We own one of them. MicroStrategy, well, we own this coming into to today, down 4.8% on the day. And like I said, we closed out our position there. Team, big bar up yesterday on volume. Pullback today, 3.75%, but nothing wrong with this. Just an inside day. XPO, hanging around that 150 level, not really showing any relative strength since its move higher on earnings and the election results. SMR breaking the 21. So this is one that's on watch for coming off of the list. It's a volatile stock. It's had a 4-day big pullback now from 31 to 24. That's about a 25%, a little less than 25% pullback. That hurts if you're in it. And we are very well aware right here. You can see the ATR on this is 13% a day over the last 21 days. We take that into consideration were we to buy it. I mentioned how it was in this channel, this rising channel, broke below the low of the channel on Tuesday, followed through to the downside Wednesday and Thursday. So SMR under some temporary pressure. Well, is it temporary? I don't want to assume that it is, but it is as of right now. And here's Snowflake. We own this down 1.85% on the day, but you can see the clear breakout. Several stocks with clear breaks from tight ranges occurred on in Wednesday's action. Very normal pullback on snow. You see the bigger volume move up, the lighter volume pullback. Nothing wrong with that whatsoever. We certainly don't want it to break back into this range. You got the 8-day moving average coming up to the top of that range that should provide additional support. So those are the five worst on the day. And with that, I'm going to wrap it. As always, like to hear from you. The email is don@revereasset.com. Phone is 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client or want more info, contact my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION. It's designed to grow assets during uptrends, protect them during pullbacks and downtrends. Look at 2022 here. Lost less than half of what the market lost because our stops got us out as we approached the 200-day moving average. And then following our rules, we stayed mostly out of the way during the bear market in 2022. That's what we do here at Revere. Never had a bear market despite having three in the market since 2018. If you're interested in this common sense approach, give us a shout. We believe in participating in the market when it's working and recognizing when it's not healthy and getting out of the way. And with that, I'll wrap it for Thursday, December 5th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.